The obvious positive side of investing is that it has a very high likelihood of success if you don't do stupid things. I mean, it's very hard to lose all your money if you invest in a broad-based, quality-oriented ETF with 300 companies in it. Sure, you might not like your results, but the chances of your investment going to zero are almost none. Whereas with trading, actually, the chances of you losing are pretty high and the statistics show it. But more on that later. Another advantage of investing is that it builds long-term wealth and passive income rather than short-term profits. Don't get me wrong, we all like those juicy short-term profits, but the real treasure lies in creating long-term generational wealth by owning fundamentally strong assets that even your children can inherit and can create freedom for yourself through passive income. This can only be done through investing, which leads me to the next advantage. Unlike trading, with investing, you have a way higher degree of security and peace of mind. It is way less training on you psychologically. You don't need to check your phone every hour, etc., etc. Having done both, the level of psychological and actual security you have with investing compared to trading is way higher. I mean, it doesn't even compare. The main negative of investing compared to trading is that it's slow and boring. I mean, if you have a portfolio growing with 10 or 12% per year consistently, your results are considered pretty good. Or if you have dividends coming in from your investments as passive income, which are 5% per year on your whole capital and are growing with 7 or 8% per year, you are doing a fantastic job. As I already mentioned, the risk of investing compared to trading is infinitely smaller, so it is normal that the results won't be jaw-dropping. There is no free lunch, and the lower your risk is, the lower the reward will be. Now, if we calculate what happens on a longer time horizon, things change dramatically, but that's a topic for another video. Alright, let's get into trading. But before that, if you're getting value out of this video, press the like button and subscribe with the notification bell. That way you won't rely on the algorithm to show my future videos to you, and you'll be able to get them straight to your notifications. Starting with the positives of trading. The first one is that for some people it can be really exciting and rewarding. This is more of an emotional benefit, so I won't dwell more on it, but it is something to have in mind, and I have certainly seen such people. I could never fall in love with it, but I'm not going to judge you if you do. The next advantage is that trading is literally the only business model on the planet in which you can 100% predict what your outcome will be before putting real money. Just sign up for a demo account and start doing trades with your virtual funds. If you control your emotions and act the same when there is real money on the line, you can have 100% preview of what happens in the real world. This doesn't exist anywhere else and is one of trading's biggest advantages. The other and most obvious advantage of trading is that if you are successful with it, which is hard but not impossible, you can grow your money very quickly. It is extremely rare and hard to do, but if you can pull it off, trading is more like a business. You can mark a specific time of the day, log in your trading platform, work for hours and hours and multiply your capital pretty quick. However, you have to know this means that unlike with investing, where you are putting your money to work for you and can enjoy passive income, trading is anything but passive. It requires a lot of hard work and emotional management to pull off, which is actually one of the first of the cons of trading. Compared to investing, it is not passive at all. The most active type of trading is day trading. I literally know people who spend 10 hours a day looking at charts on their screen. A more relaxed type is swing trading, where you can hold positions for weeks and so afford to only look at them once a day for 10 or 20 minutes. But from my experience, whatever you do, it requires active management at least daily. Another negative is that it is very high risk and it's hard to be successful. According to a study from the University of California, only 13% of day traders were consistently profitable over a 6-month period, and most importantly, only 1% are able to consistently make money over 5 years, according to a different study. This puts your odds of winning literally 99% against you. Now, I'm not saying you shouldn't try, but hey, at least you know your odds. Another negative is the emotional roller coaster. One day you win big, you start hoping that you have finally learned how to do that trading stuff. On the next day, your confidence is confirmed and you win again. And then on the day after, you lose everything. This can be really exhausting and taxing on you, so you need to be careful with that. The next con of trading is addiction. Trading can be addictive, kind of like playing a video game or gambling, because of something in our brain called dopamine. Dopamine is a chemical that makes us feel good when we do something exciting or win something. Here is how it happens when people trade. First, anticipation of a reward. When a trader anticipates a potential win or profitable trade, the brain releases dopamine, which creates a feeling of excitement and anticipation. This is similar to a gambler anticipating the outcome of a roll of the dice or a spin of a slot machine. Second, risk and reward. The act of trading often involves risk, and taking risks can lead to an increase in dopamine levels. The greater the risk and the higher the potential reward, the more dopamine is released when the risk pays off. And third, random reinforcement. Trading markets is unpredictable. When a person trades and experiences a win, even if the win is random and infrequent, the brain interprets this as a pattern. Dopamine then reinforces this behavior, which can lead to a behavior pattern similar to gambling addiction. Speaking of that, you might hear a lot of people describe trading as gambling, and to some extent it can be. The vast majority of the people who trade are indeed gambling. However, I don't want you to think that 100% of traders are gamblers. As a person who has joined courses by successful traders, I can see that there are people who obviously make money for 20 years, which statistically cannot be luck. There is obviously a lot of skill involved, but there is also some mysterious part of it, and so the combination of skill and talent can be very rare to find. If you think you can find it, more power to you. I'm not saying it is impossible, just that it's really hard. This video is part of my guide I did on investing versus trading. To check the full version, click on the video that should have appeared on your screen right now.